Good morning and welcome back to Almus Market Mornings. Businesses, politicians, economists, journalists, investors, brokers, and risk management firms like ours were waiting for the August 1st deadline, which is here. With respect to India, we are at a tricky place with our negotiations, especially after President Trump has lambasted India in his more recent tweets. Globally, we are seeing a mixed bag of updates. Some important US allies have gotten high tariff rates, including Switzerland and Canada, along with a few others. Even though the deadline is here, I think generally there is a lack of clarity on many points, even for countries where a trade deal has been signed. JK, we are at August 1st. What do you make out of the entire tariff situation? Yesterday, the PC was also released, which is the Fed's preferred inflation gauge. Are we seeing tariffs seep into the inflation numbers?
No, I think it is yet to reflect fully the tariff impact in the inflation number. And because, as Powell himself said, some of it could be absorbed by the retailers also, and some will be passed on to the consumers. And the picture on tariffs is still evolving. We only had the decision about India yesterday, although it was against India's expectations, being at 25%. And even today, we have seen a headline saying that Trump has increase the tariff on Canada from 25 to 35%. And a host of other deals are also possible by end of today. Although the major countries like Europe, UK, and Japan have already signed. Korea also got a deal at 15% yesterday. So I think the good part of the exporters to US have got at 15%, but India has been an exception. And non-tariff issues have come into play as well as far as India is concerned, because US is looking at India opening up many sectors, which India is trying to protect with its own economic interests in mind. Uh, so we will have to leave with the higher tariff until a full comprehensive deal between India and US is signed off. Even though August 1 deadline ends, we will still keep hearing about the trade deals and perhaps some revisions to the tariffs as well. So that is what I expect. As far as data is concerned, the PCE number did show a rise in the month-on-month headline as well as in the core number. And at the same time, we have also had the spending come down, being lower than expected at 0.3% personal spending. Weekly jobless claims were again lower than expected, but slightly higher than last week. Claims have been on the higher side. So this actually ends a series of leading indicators to the monthly jobs data, which is due today. And we have had several indicators this week on the monthly jobs. I mean, leading up to the data, like Joel's data on Tuesday showed uh, smaller smaller number of job openings. In fact, much lower than the lowest number since 2022. Quits rate have been increasing. And then we had the ADP number, though it came at 104,000, more than expected. It's still, if you average out the 2 months, you have, number that is much lower than the average of the last 3 years also. So then, of course, we have had the challenges job cut number that also showed a higher, um, you know, higher retrenchments by US companies. So US companies hirers are actually taking it cautiously, not really hiring people at the rate at which they have been. And this is because they also wait for the tariff picture to eventually clear out and then see what impact it has on the consumption and the economy. So the policy implication of a PC number is that it strengthens Powell's argument that the inflation still remains high compared to the target. and the impact of the tariff is yet to be felt. So almost now September rate cut by Fed seems to be ruled out now, and we should only expect some action in December, unless economy moderates very fast, and the employment situation gets worse. So that is where today's number also gains a lot of importance. In the meantime, yesterday Bank of Japan also held rates steady. But they remain cautious about even the next rate hike, because they think that there can be still some impact from the tariffs, and they're not very committal about when the policy will, likely see. They're keeping their options open, basically. Um, and then we have had inflation number from Germany, which showed the inflation moderating slightly. But again, this is not going to sustain, because there will be some impact of the higher inflation in the US on the Eurozone as well. We'll see the Eurozone inflation number in the coming sessions overall. And we have already reported that Germany had seen a contraction in this quarter, in the latest quarter, at minus 0.1% after rising in the previous quarter. So the initial boost from the front loading of exports to the US have been, now eroded, and that's why we are seeing a lesser amount of industrial activity also taking shape. So overall, we are expecting more evidence of how the economies are moving, and particularly in the US and Europe. And that has a lot of bearing on the dollar's move as well. As we had been hinting for quite some time, dollar has corrected quite a bit, from about 96. We are almost closer to 100 now, and even the euro has fallen from 1.1850 to almost 1.14, and technically looks poised for more losses there. And Japanese yen weakness has been telling move, because it not only saw hawkish statement from Powell, but also the Bank of Japan themselves wanting to have a more wait and watch approach towards their monetary policy. So Japanese yen is now closer to 151, and possibly targeting 152 half in this move, and by the time by which the dollar index also could reach 100.50, which is the target that I'm looking at, and euro possibly to 1.1250, which is also a Fibonacci target for the entire up move that we have seen from 1.0150 to 1.1850. So overall, dollar remains strong, and that is another factor which has also been impacting the INR, because it's not only the tariff related negative sentiment, and also the sanctions that are likely on Indian imports of oil from Russia and Iran. So even the dollar index, which has been steadily moving up, has kept the dollar INR well bid. Although we have seen sporadic selling from PSU banks at various levels, so that is not really contained the move, and it is only perhaps slightly smoothened the up move. But we have been seeing gap ups, and now uniquely yesterday we have traded in a new all-time high range for the entire day, above 8750, and that is significant for technical watchers. And although we did see consistent selling from perhaps the central bank above 87.70, and kept the rate from moving even higher. So that may not last long if the dollar index continues to rise. Only thing that could limit rupees losses more from here is because RER is now fairly valued, and it will not fall independently. It will fall if the dollar index is also rising. Of course, we also have to take note of the fact that FI outflows have been to the tune of 2 billion in this week alone, and that's quite a big number. Monthly number is negative now, and the overall for the year, it is now for the year 2025, it is around 9 billion. So it's quite a good amount of outflow that we have seen. So near term, the flows will determine, and of course, sellers are not forthcoming because of the strong trend that has been observed. Technically, 88 will offer some resistance, becoming the previous high, but some other technical indicators show that 88.30 is also likely, but that may not be seen today. because of the job number from US that is ahead, and possibly the central bank intervention for the time being. We are also seeing other currencies lose out, like the Canadian dollar and the Australian dollar. And important point I've observed is also the stock market yesterday, which were well in the positive in the US, ended on the negative side. There's some sort of a key reversal that I can see in the stock market. And for instance, today in the Korean market, we have seen 3% fall, and the Korean market has been rising consistently quite a bit. And to take a view on the Indian market, we also look at how the global markets have been become, because that is the influence that it carries also. So it looks like having hit all-time highs for quite a few weeks now, US markets are poised for a uh, good correction, and that can also have an impact on the Indian market, and the resultant FI outflow can also be seen. So all points to rupee weakening more, but then it will be calibrated because of the central bank actions. Thank you.
Thank you, JK. And dollar strength, that's the broad theme we are also looking at. Dollar has strengthened from its lows of 96, which is the dollar index. Euro is trading at 1.14. Yen has been weakening, trading above 150, closer to 151. Rupee is also affected by this dollar strength, and it's not just the Indian tariffs and the fear of secondary tariffs. It has been the rupee depreciation in this phase has been quite significant, as JK mentioned. Yesterday, we traded at new all-time low ranges for the entire day, above 87.50. So these are quite significant levels. There has been central bank intervention as well, but dollar demand has been quite significant during this time. FII outflow has been at 2 billion for this entire week. For 2025, it's at 9 billion. So there are flows which are determining the moves. We'll need to see how all of this plays out and how the tariff game plays out for India. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with a fresh round of updates.